We're starting to see this kind of same topping pattern and relative strength now. I would suspect that at some point you're going to get this kind of at least medium-term correction of some sort. Could be later this month, could be next month, but we're seeing this kind of topping and relative strength close to triggering a bit of a momentum sell signal as well. So again, just a pullback to the 200-day moving average, which would pull you back to around 6,000-ish right now in the S&P. That's about a 5% correction, so it's not nothing. But here's what you need to know before the bell this morning. Earnings week coming up this week. It's going to be a lot of stuff moving markets. Technically, the markets are doing just fine. There's nothing really kind of wrong. If you haven't read this weekend's Bull Bear report, it's on the website. It's our weekly newsletter. You can also get it on X if you haven't followed me on Substack yet, at Lance Roberts. It's really easy. Go to Substack, follow me at Lance Roberts, and I post everything there. It's a really kind of easy platform for reading, getting stuff that emails you a notification when I post, so it always keeps you up to date. But you also get it on our website, realinvestmentadvice.com. But anyway, this weekend's newsletter, I laid out a 3-month view of kind of what the markets are going to be doing on a probability basis. So about 50% probability this kind of bull market trend is going to continue. There's not a lot to really bring this market down. But having said that, again, there's another 50% that's either just a choppy sideways market, which is about 15%, 35%. We actually get a correction at some point in, potentially August, September. But if you pay attention to what's going on with the markets right now, we've got kind of a very similar setup going on. If we go back to May, markets got very, very overbought. And, we kind of saw this very kind of overbought condition, and it led to a bit of a correction back to the 200-day moving average. And that was a really good setup for adding money to portfolios. We had this big correction, got above all these moving averages, corrected back to that important level of support. Market worked off some of its overbought condition, but not a lot, right? We just kind of chopped around a bit, and then markets kind of took off again. Here we are. But again, we're starting to see this kind of same topping pattern and relative strength now. I would suspect that at some point you're going to get this kind of at least medium-term correction of some sort. Could be later this month, could be next month, but we're seeing this kind of topping and relative strength close to triggering a bit of a momentum sell signal as well. So again, just a pullback to the 200-day moving average, which would pull you back to around 6,000-ish right now in the S&P. That's about a 5% correction, so it's not nothing, as they say, right? So again, you want to be a little bit cautious here. Markets are pretty stretched going into earnings. Now, expectations are really, really high right now for earnings season. So, just be a little cautious here. It really makes a lot of sense to come in and just do a little bit of rebalancing your portfolio. Just, take some gains out of your winners. If you've got stuff that's really just not performing, this is a really good opportunity to let it go, because if it hasn't performed in this market as of late, it's not going to perform well when the market goes down. So just, kind of think about your portfolio. And we talked a bit over the weekend about, beta and managing portfolio risk, etc. So again, when you just look at your portfolio, if your portfolio is moving up or down more than the market on a daily basis, your beta relative to the market is higher, which means that if you get a 5% correction in the market, your portfolio is going to be down more than 5%. And if you're okay with that, that's fine. Nothing wrong with having higher beta in your portfolio as long as you're aware of it. And again, if we have a 5% correction, which is becoming a little bit more of a realistic probability at this point, it's just because markets are getting very stretched, they're getting extended from their 200-day moving averages, etc. Just a normal pullback to support will be 4 to 5%. If you're okay with that in your portfolio, that's fine. But if not, you may want to think about taking a little bit of action here, just doing a little bit of cleanup work around the edges. Again, nothing dramatic. It doesn't mean sell everything. But there's a lot of positions that have really, really gotten extended here as of late. NVIDIA is a good example of that, really extended. And so if you get a correction, that stock has a higher beta than the market. It's going to go down more than the market itself. So just be aware of that risk and kind of take a look at your portfolio today and think about what you need to do going into earnings season here over the next 2 weeks. That's what you need to know before the bell this morning.